For decades, the Republican Party has been known for cutting taxes. It started with Ronald Reagan. He signed the Economic Recovery Tax Act of 1981, cutting the top personal income tax rate from 70% to 50%. Later, he signed the Tax Reform Act of 1986, lowering the top rate even further to 28%. George H.W. Bush followed, famously saying no new taxes, then raised the top rate to 31%. Many believe that move cost him re-election. Bill Clinton raised the rate to 39.6%. George W. Bush cut it back to 35%. Barack Obama raised it again. Donald Trump lowered it again in 2017, dropping it to 37% as part of the Tax Cuts and Jobs Act. Now that 2017 act is scheduled to expire. With only a slim majority in the House, Republicans are trying to extend those lower rates. At the same time, they are proposing new ideas like eliminating taxes on tips, overtime pay, and Social Security benefits. Here is the twist. Some of the wealthiest Americans might be surprised, because the Republican Party appears to be shifting. It is becoming the party of the working class instead of the wealthy elite. Right now, the top federal income tax rate applies to people earning over $609,000 if single, or over $731,000 if married filing jointly. These are the top 1% of earners. In 2021, they made about 26.3% of the nation's adjusted gross income. They paid 45.8% of all federal income taxes. Many of them assumed the government would continue protecting them from paying more. But Axios recently reported that the White House is quietly floating a new idea. Let the top rate go back up. In exchange, move forward with Trump's proposal to eliminate taxes on tips. So how much money is at stake? When President Biden suggested raising the top rate back to 39.6% on income over $400,000, the Tax Foundation estimated it would raise $48.3 billion in 2024 and $169.8 billion between 2025 and 2034. Cutting taxes on tips, on the other hand, would cost the government about $91.5 billion between 2025 and 2032. These are large numbers, but still just a small part of the total federal deficit. As Senator Everett Dirksen once said, a billion here, a billion there, and pretty soon you're talking real money. Raising top tax rates while cutting taxes for workers who earn tips could help the administration deflect criticism. Right now, Democrats are angry about a proposal to cut $880 billion from Medicaid. One White House official told Axios, if we renew tax cuts for the rich paid for by throwing people off Medicaid, we're going to get slaughtered. And there is more. The administration is once again trying to close the carried interest loophole. This tax break allows private equity and hedge fund managers to pay the lower capital gains tax rate on their income. It helps fewer than 10,000 taxpayers each year. But it costs the government up to $6.3 billion annually, depending on market conditions. Even Trump has said it should be closed. So have Obama, Biden, and Kamala Harris. And yet, just like Jason from the Friday the 13th movies or Michael Myers from Halloween, this tax break refuses to die. This is a reminder that nothing about the 2017 tax cuts is final. Not until the law is passed. Not until the fat senator sings. Tax professionals and business owners should pay close attention, because when the rules shift, timing matters. Daveed Tuck, ex-IRS auditor and Portland tax consultant, is tracking these changes closely. He is here to help you stay ready, no matter where the tax laws land.